Delegates at AM Best's Europe Insurance Market Briefing were treated to a detailed analysis of the global reinsurance market. I'm Richard Banks with AM Best TV. I'm joined now by Ghislain Le Cam, Director Analytics at AM Best, who was responsible for sharing some of those reinsurance market insights at the conference. Ghislain, it was a typically thorough and thoughtful presentation. Can you tell us a little bit about reinsurers' performance in 2020? How does it compare, for example, with previous years?
Yeah, thanks, Richard. I think maybe I'll start by actually talking about the what came before 2020, right? And what I would say is that in the years running to 2016, up to 2016, we've had pretty good years for reinsurers with combined ratios below 100%, and probably. In 2017 is when we started seeing a bit more of an active cat period. In particular, that's when we had the hurricane activity in the US with Harvey, Irma, and Maria. So in 2017, that's when we saw the combined ratio increasing to above 110% for the top 30 reinsurers we've looked at, which was the worst recorded in years. So I think at the time, the question we all had was to what extent this will impact the soft market conditions, to what extent will the industry react. And what we saw was some hardening, some price increases, but probably not to the extent that we could have expected. And in 2018, we only saw a small improvements in results. Again, 2018, there was some cat activity with Typhoon Jebi and the California wildfires. That again led to a combined ratio above 100 for the top 30 reinsurers. And I think that's when we really started seeing the market reacting more strongly. That's when we started seeing momentum building in terms of improving in pricing and tightening in terms of conditions. 2019, again, not immune in terms of cats, right? There were another couple of significant typhoons in Japan, Faxai and Hagibis. There was Dorian in the US. But what was really interesting in 2019 was the fact that there were negative prior year developments associated with the JB losses. And I think for the market, what that did was highlighting the fact that cat events are not necessarily short tail. And that again is something that contributed to increasing the underwriting discipline for the market. So despite this improving trend, what we've seen for 2020 is that the results were still not great. The combined ratio for the top 30 reinsurers was just above 104%. Clearly that was caused by the COVID-19, right? No surprise here. But again, focusing on this cohort of the top 30 reinsurers, we've seen that the impact of COVID ranged from 7 to 20 percentage point on the loss ratio, which is quite significant. And yet the average score for the market, 104%, does not quite reflect that. And it's probably because this 104% combined ratio for the market, there were a few different elements behind that, right? I think that what we saw was clearly some improving underlying trends on the attritional losses, although it's something that's quite difficult to measure. And the other side of the COVID-19, that COVID-19 with the shutdowns, the travel restrictions, this had as a consequence to slow down the economy, but that has actually a positive effect on the loss experience on the more traditional lines of business. So here again, a positive effect for the reinsurers results. Maybe something that I want to touch on that's quite interesting also, again, behind those combined ratios. And so I talked about, some pressure and good rate momentum and all that. Something that's benefited the combined ratios of reinsurers in the last few years were prior year developments, so releases on prior year reserves. I think that what we've been saying for quite a few years now at AM Best is to what extent those releases are sustainable, right? For the last few years, reinsurers have had to contend with, a challenging operating environment, pressure on the interest rates that surely had an impact on the investment results on the reinsurers, probably not giving them much room to maneuver on the technical side to set some buffers on the reserves. So, clearly I think that the reserve releases that we've seen in the past, the positive reserve development that we've seen in the past, and the positive effect it's had on the combined ratio, there are clearly questions as to the extent to which this is sustainable and how that will evolve in the next few years.
Yeah, that's a really good point, very interesting thing to consider there. So with all that in mind, there's been a lot of discussion around hardening markets, around price increases, tightening of terms and conditions. How do you expect that to impact the profitability of the sector?
It's difficult to answer, right? I think looking at the P&L of reinsurers, and maybe I'll start with the loss side of the P&L. Historically, we've seen the results of reinsurers heavily influenced by the cat activity, and clearly the results for this year for the industry will depend on how this will play out again, right? I mean, it's still time for more cats to come. I think there is also uncertainty around some events. I mean, the obvious one is COVID-19, right? I think that what we have seen, and we think that reinsurers so far have been quite conservative in their estimates, but clearly, COVID-19 losses, it's still something that could evolve and that could impact the results. Another element that's been that reinsurers have had to deal with in the last few years is what we call social inflation, and it's something that in the last few years has led some significant reinsurers to increase their reserves for their casualty exposure in the US. So again, some potential for more creep up in reserves driven by social inflation, because very clearly I think that the underlying trends that are supporting social inflation seem to be here to stay. So quite clearly another element that could negatively impact the results. Maybe on the revenue side, I mean, you're right, Richard, right? I mean, I think we've been talking for the last couple of years about the hardening of the market, good rate momentum. There's been a lot of noise around that. And very clearly, this is something that will have positive impact on the returns. But I think it's also important to mention that those rate increases that we've seen, we've been talking about double-digit rate increases. On some lines of business, there was a real issue with price adequacy. So rate increase is positive, certainly, but there is clearly a question as to the extent to which the rate are adequate, right? So, and I think that on some line of business, there are still some concerns regarding this rate adequacy. So overall, I think that we could see some improvement in the results of reinsurers, subject to the elements on the loss side that could have negative impacts. But any improvements, in my view, would remain fairly limited, though.
Interesting, yeah. So you've given some really good insight into how we've got to where we are and where we are. Let's take a little look into the future, shall we? What kind of influences do you think are likely to impact the global reinsurance sector in the future, and how do you see some of them panning out?
Yeah, of course. It's very difficult to predict the future, right? I mean, I wish I could do a better job at that. But what I would say is that AM Best has a stable outlook on the global reinsurance markets. And the way we like to articulate things, right, because things are not stable themselves, right? I think there are a lot of moving parts. So maybe starting with the key headwinds and the key challenges that we think that the industry will continue to face. Clearly, there will be claims uncertainty, right? I mentioned COVID-19. How long will these claims take to be settled? There's still room for development there. There are also questions around secondary perils. Those perils that historically were not too impactful, probably the peril that were a bit less well understood by the industry because their impact was a bit more limited, and we've seen clearly a creep up in terms of share of those secondary perils in the results of the reinsurers. Another element, social inflation, I've mentioned it. I think there's still a lot of uncertainty here and potential for negative development for the sector on this side. I think there are also questions around the risk modeling challenges. There are a lot of discussions around about the fact that we're evolving in a world that's increasingly connected. So had to deal with a risk universe that is constantly changing and increasingly connected. There are also new risks that the industry needs to understand better. I think a good example is cyber. There's been a lot of work done around this, but very clearly from a modeling standpoint, those risks represent some challenges. And maybe a quick word again on the other challenge on the investment side for the industry. I think will remain the low interest rates and the limited investment alternatives, maintaining pressure on the investment returns. Likewise, the question in terms of low interest rates, this is something that has led new capital to enter the segment. So, how is this dynamic of low interest rate with new capital entering the segment going to pan out is something that we'll keep on watching. Maybe on a more positive note, right? Because we have a stable outlook. So clearly those challenges, also there are some tailwinds for the industry. The positive pricing trends, I think I've mentioned it, right? We've seen good rate momentum in the last renewals. This is clearly something that's a positive for the industry. I think that likewise, when I talk about the impact of new entrants on the market, the alternative capital, whilst this has stayed in the market, what we've seen is that their impact for the traditional reinsurers has been fairly limited. And maybe a last point, again, that's underpinning the stable outlook is the fact that the segment remains well capitalized, right? I mean, there is no issue when it comes to the solvency level of the industry. And again, this is clearly something that we view positively as supporting our stable outlook.
Ghislain, as ever, fascinating insights there. Thank you very much indeed for joining us. For more details about AM Best's Europe Insurance Market Briefing and a host of related insight, visit ambest.com. For AM Best TV, I'm Richard Banks.